Hey guys, how's everybody doing? I know I'm about 8 minutes early, but I wanted to go live before the end of the day in case anyone wants to see any option trades before the end of the day. You never know. I thought there's one I didn't do at lunch also, Dell and Deck, right? I think I was supposed to get to Deck. Let's see. How's everybody doing today? All right. I guess we should have looked and seen what the market did into the close. I mean, it's steady. Put in a couple of red bars that look like we're going to turn around, but not really. All right. Well, so is Deck have earnings coming up or something? Gosh, right. Once I get all this worked out, I have some really cool stuff to show you guys that I did not even show you in the morning episode. Oh, there's Dick's. I could have got Dick's and Deck mixed up. But there's some good ones this week, though. So is there anything we need to do right now? Yes. Dick's or Macy's. So, because that's before the open tomorrow. So I'm just going to say, Dick's, let's see what the IV is. The IV is 44. It's $150 stock. Macy's is only $12, so that's not really. And the IV's 52. Let's do Dick's. All right, let's do that. Oh, and down here, I was on the wrong month. The IV actually down here is 93, so that's really good. So yeah, of course, we're gonna do Dick's right here. We'll do a 27 delta, maybe like what's that one? A 7. That might actually work. Actually, do that twice. So it puts. Then I'll share this with you guys. I'm trying to get it done fast. The expected move out is somewhere around 185, 190, something like that. So we'll stock that strike with an option. $112, take our wife to dinner, about $900 risk. So about 12%. Earnings, bullish shot. I should have put a bullish shot at earnings, right? All right, there you have it. There you have it. That one, math-wise, anyway, is decent. Hey, Jerry. Hey, Sean. How are you doing? Jerry and I were talking about something about the married put strategy, and I want to maybe look at that. We've talked about the same thing on the live stream before, but let's look at that here in a little bit. I wanted to make sure we had everything done. So, I mean, A&F, Macy's. Is there anything else in here? PLAB. PLAB sounds like it should be good. VNET, but I never heard of them. So, but then tomorrow, okay, after the close, we have NVIDIA, ELF, Hewlett Packard, Synopsys, Best Buy, Burlington. There are a ton of good ones. I like usually Foot Locker can be a good one to do. It can be at times, but Marvell's a really good one to do. Let's do a pre Marvell trade. Let's play that to creep up into earnings. Or that's kind of my default. I mean, I'm either bullish or I just won't play generally, but the market's been cooperating pretty nicely with us lately. Okay, so what do we have there? $52 reward. That's about 1/5. That's we'll do it like this. All right, that'll work. Like I always say, just this trade is a good trade. You don't have to add the other wing of the max trade. It makes it have max convexity. You don't know max convexity. It makes it have convexity or asymmetry, but it's not. But this is a good trade here. 74% chance of profit. If you're right, you make $131. All you have to do is the stock can't drop by more than 8.4%. And you're going to have that sweet crush after earnings that, so there's nothing wrong with just this trade. I mean, the wing's a tactic, it's a tactic. A lot of people don't like it, and that's fine. Don't like it, don't use it. It's a fine trade by it. It's a fine trade by itself. All right, let's see here. Sorry about this. There you have it. Let's see. So, well, we need to go out a little bit further. Okay. This one doesn't have just great liquidity, or it's 148 IV, and the price, $59 is about the right price. But look at this bid at 116, asked at $1.52. I mean, we'll save this one just to see what it did, but use caution if you're trying to do it. All right, looks like the market's closing. Let's see if there's anything else we've been looking at in here that have been doing anything. There's some ideas I have for SB. Hedge ideas that are down, but they aren't down that much. My hedge ideas are cheap. Hedge for next week, down $93. All right, for this week, all we have going on is NVIDIA has earnings coming up, and that's a 3-leg risk reversal that I have on close, something similar in real life. And you got to love NVIDIA earnings. All right, now I want to show you what I worked on. Lone Trader's in there typing. Oh, I wonder if Lone Trader knows we're in here. Anyway, Lone Trader will join us in Discord. All right, so yeah, I had some stuff I was pretty proud of. Oh yeah, I've been doing a lot of back testing lately. I was also proud of my model account. The Tasty Trade account was up big today. I'm only down 7% since inception, which is the closest I've been to break even in a while, or in months. Everything's going well. Look at GPTY up 3.3%. The diversification's working out well today because GPTY and ULTY are up 2 and 3%. LFGY is up 3%. Where my hedges, the ones that are, that are supposed to be down, are only down a little bit. GDXY is down 0.7%. YQQQ is down 1.5%. But I can deal with 1.5%, considering my good ones are up double. They have some asymmetry or some convexity, whatever. I like that. Anyway, that's good to see, but that's not what I had to show you guys. Let's see I had to show you guys. Yeah, the new spreadsheet's called the yield tracker. So the yield tracker is pretty freaking cool. We'll see how long it lasts though. I bet I worked on this 3 hours just to get it to this point. But anyway, here is the yield tracker. What this is all the option premium company wide. And I can sort it. I could sort it by yield. I could sort it by money, but just the most money. So this was Friday's trades. Misty brought in 9.5 million, and that's in their cover call spreads. And that factors in everything. It factors in the factors in the long part of their call spread and the short part. It factors in everything. Anyway, so Coney was the next biggest earner, earned 7.1. So that's Coney. When you earn 7.1 million in a day on a base of 1.9 billion, that's 60 basis points. Pretty good. NVIDIA's worth 1.3 billion and made 6.4 million, or sold 6.4 million. Tesla sold $5.7 million worth of premium. And look at ULTY. ULTY is only worth $1/3 billion, but yet it's selling 3.4 billion. It's selling more in proportion with what it's worth. And you can see that right here, right here in column I, that's 106 basis points. That's the big sell of the day. ULTY and LFGY. LFGY made 104 basis points. Morrow made 173 basis points, but Fiat made 109 basis points. Winter made 309 basis points. Anyway, but that's how it went. Company wide, YieldMax is worth 10.39 billion. We'll call it 10.4. They have 10.4 assets under management, at least of the funds that made a trade Friday. I don't know that everyone's on this list, but I think it's most everyone. They're somewhat, we'll see. It's everyone that had a trade. So of that, they sold $43.7 million worth of option premium. So that's 42 bips. If they did that every day, that would project a yield of about 116%. Obviously, it was a big day Friday. That most days, not all days are going to be that big. But we can sort it. I can sort it by yield projection. I could sort it by anything. But I really think the amount of premium kind of tells you the most. But it's also fun just to look at the assets under management. I just like to see. So right now, Misty's the biggest fund. Then NVIDIA, then Coney, then Tesla. Then Palti's 486. I can't believe there's nothing between Palti and Tesla. And then Alti, ULTY, is 323. And we have AMZ, Fibby. Anyway, and you can see the rest of them. Look at Infly. Infly always does so well, and it's still, even as well as it does, it only has 150 million. But in any event, I hope you guys like that. So what else we can look at? Here's the individual trade. If you want to look at any individual trades, we can do that. Like maybe I should do that on MicroStrat, like pull the biggest trades out of here, like these guys. Find the biggest. There it is right there. They sold. Oh, no. Oh, no, I'm sorry. Yeah, find the biggest right there. They sold the 390s, MicroStrategies. They sold the 390s, and then it looks like 2000, and they sold the 390s, and I can't find the other side of the spread. Anyway, they do have some longs at 442. Anyway, but they sold the 390s, a lot of them. So they're going to be, that's going to be a good place. We want MicroStrategies to go straight to 390 and die. That's what, that's the idea. Your max profit is where the short strike is. And you can look at the biggest, you can look at all this dollar volume right here. See, there's $7 million right there. And that's actually a synthetic, and I should have taken that out. Gosh darn it. I'll fix that later. I need to take that out. The MicroStrategy number might be a little high. Just pretend like you didn't see that. All right. Well, what do you guys have anything you want to talk about? You guys like the new charts? Hey, Red Sox. I really appreciate Red Sox being here. I really appreciate Jerry being here. Oh, yes. Okay. We've talked about this a bunch before. I think people have tried this. So are there people out there that have tried going out there say you have 2,000 shares of Tesla or 5,000 shares of Tesla or Misty or something. going out there and buying puts in like Tesla or Misty itself, and just buying a put and trying to hedge it directly. I see, not Sean. I see what you're saying. I'll do that in a sec. I'll get Telf in a second. I'll put it up there so I remember. But anyway, we were talking about that. So let me show you more directly. So here's what I was looking at. So NVDY is one of the best funds out there, right? And so I was looking. They paid $1.62 this time. That was kind of high. It was payable on the 23rd. The month before is the 25th and the 28th, 31st. Looks like they pay right around the end of the month. And they paid $1.60, but the month before that, they only paid about 70, then about 80, $1.60, about 80, about 90, $1.20. Okay, well, so I was just looking, how expensive would it be to try to, if you had shares, to try to lock this dividend in? So, and every time I look at it, it's always too expensive. By the time I look at it, I think it's better just to take a chance. But so let's go out to here. We're going to do a married put, or we're just going like where we owned a put to lock out the downside, and we could do it in Tesla, or it could be in whatever. Well, we'll look at NVDY because that's what I was looking at to see if there's any profit after you pay for the put. And so this put expires June 20th. So that would just get you the June payment, or that wouldn't even get you the June payment. This one's July 18th. That would get you the June payment. This one's August 15th. This will get you the June and July payment. Plus, presumably, there's one that just happened. You should have had that one too. You could have bought it and tried to capture 3 of them. I mean, bought it, captured the one that just happened, the next 2. And so let's see. Could you do that? Well, it's bid at $1.30, asked at $2.30. So let's just say you have to pay the full freight. So $2.30. I mean, that's about what you're going to make in dividends, right? I mean, they don't leave a lot. They make this ridiculously expensive because the amount of the dividend is so high. It's priced in the put. So, I mean, yeah, I mean, I would just not do that. I would just say I would rather take my chances. Because the other thing is, if you paid $2.30, remember, it has to go $2.30 under $15.30. I mean, you move your break even down to $13.80, $12.80, or something. I mean, way down there. And it's good for a black swan. Don't get me wrong. If you would have had this before the tariff thing, you would have loved life. I mean, this could save your butt. I'm not saying that, but it's like anything else. It's expensive. It's super. I mean, that's my theory on it. Now, I have a better way to do it. But I think insuring Tesla or NVIDIA with options, I mean, it's possible. One thing you could do, and I know people do this, they also sell calls on this. You have to be careful not to get exercise if you don't want to lose your stock, but you could maybe sell the 16 call. It's only like 50 cents you could get for it, but still it offsets some of this $2.30 you have to pay. So now all of a sudden you just have to pay $1.80. I could see, something like that, but still $1.80. So $1.80 is the magic number. So we'll go back here. If they do 3 payments like the last 3, it'd be 160, 70, and 80. I'm just trying to speak around numbers. I mean, you'd make about $1. You make about $1. What do you guys think of that? Yes, I will. I'll share that on the ones I own. Well, let's look at the ones I own. We were just talking about. I have a model portfolio, but I own pieces of all these. But ULTY, GPTY, LFGY, GDXY, and YQQQ are around 20% apiece. YQQQ is more like 15, and the others are a little bit higher. But my big the big ones are ULTY, GPTY, LFGY, and GDXY. They're around 15% to 20, and then I have a few around 5% that kind of fill it out, Misty and YSpy and TLTW and some ones like that. I'll do a show on the model portfolio and publish the exact. Whenever I make a change, I publish, and usually at the end of the month, which is coming up, I make changes. And in fact, there's a little bit of cash that's in the account. I'm trying to decide what to buy, what to add right now. And I'm thinking about adding maybe some NFLP or some InFly. I don't have any InFly or NFLP. I don't have that much cash, but I was thinking about just adding a few shares of that just because it tests so well in all my metrics and stuff. It's such an unsung hero if you want to look at risk-adjusted reward. In fact, we could look at that really quick if you guys want to, but I will do more on my model portfolio. But here is high yield TNA, so high yield technical analysis. So what we can look at with this, I can see just which ones are up the most right now, and it's for some reason there's four funds that aren't working for some reason. HYG, it's nothing we're that interested in except maybe SpyEye and Biggie, but forget about those. So out of all these other funds, this isn't just YieldMax, this is a lot of stuff. NFLP, look at that, is up more than the other fund, up more than Maxi, and it may not really be up more than Maxi, but it's up more than Maxi when you figure in that it's a lot less volatile. But both are doing well. If you have NFLP, Maxi, Carvani, TSLP, Snowy, Coney, you're loving life. Now let me show you what this NFLP, and that's probably that's why I think I'm going to add, and I might even dump a little. TLTW is not really doing anything for me. I may dump TLTW and anyway, we'll make a show about it. I mean, TLTW is doing something for me, but it's not right now. It isn't. Man, look at this thing. This thing's on freaking fire. Well, I mean, I don't know what else you say about this. ANDA pays an 18% yield. Excuse me. I mean, an 18% yield, and it gets upside. Now, people will always say, well, these things, the big thing when these first came out is people would always pull up a chart of Netflix. You see influencers do this all the time. They say, well, hey, NFLP, now here's Netflix. It doesn't do as well as Netflix, but that's obvious. I mean, that's like putting a picture of your mom on the screen and going, here's my mom, and then putting a picture of your girlfriend on the screen. And here's my girlfriend. My girlfriend's hotter than my mom. Or, your girlfriend's supposed to be hot. Your mom's not supposed to be hot. That's not her job. NFL, none of these covered call funds, their job isn't to outperform the parent asset. They're all going to underperform. It's a given that they're going to underperform. If it was just long-term capital appreciation you cared about, of course, you never mess with any of these option writing strategies. But anyway, I know you guys know how it all works now. But for a long time, remember, people just couldn't get past that. Well, yeah, but they don't do as well as the parent. I mean, and it's not only that. Like I always remind everyone, we know why that's the case too, because there's no such thing as free money. If there was a covered call fund that did better than the parent, could all the time, could beat that'd be like free money, because you can't be like having your cake and eating it too, and and that kind of stuff just doesn't happen. And if the market does have something like that, it's long gone. The professionals have already taken it out of the market. So anyway, but I always get a kick out of that. But yeah, so yes, NFLP doesn't do as good as Netflix. Of course it doesn't. and it's not supposed to, but it's still, but when you consider it pays an 18% dividend, and you know how much of a dividend Netflix pays? Zero. That's the thing that people just miss. So, you know, I mean, like I said, I know you guys get it, but so it comes down to, do you need income? So if the answer is no, I don't need income, then you know, I don't need income. I have a job. I work, but I want a Lambo. I want some income. Okay, well, you don't need income. So just stay with Netflix, grow your nest egg, and maybe in 5 or 10 years we'll talk about your Lambo. 20 years, whatever. But if you're retired and disabled, even though Netflix does better than an FLP, it's not going to do better for you. You need to talk to your planner, but you might do better with some kind of fixed income, some kind of bonds, or one of these covered call funds or something. Anyway, all right. Well, but this fund has been a huge success. Look, they went from no assets under management to 12. They only have, this is criminal. How does this fund that does so well only have $13 million assets under management? Look at this thing. It makes an 18% dividend. It's up 17% year to date, 32% for the past year. And this is not including dividend. These numbers on the right are just NAV return. NAV return only. It's up 16% for the year. You know, once you include the dividend, it's even more. You can look over here where it says return percentage for 1 year. This tells you with dividends. So you can see right there. 1 year is 57%. That's with dividends. You can see performance year 32.52. That's without dividends. The difference between 32 and 57 is what? Is about 18 points. It's that, and that's what it is. That's all there is to it. These are just financial transactions. It's your money. You can either have it later, through long-term capital appreciation from the stocks going up, or you can have it now every month in payments, but there's going to be a cost for those payments, and the cost is that it doesn't perform as well as the parent asset. But like I say, it's not supposed to. That's like saying my cousin doesn't kiss as well as my girlfriend. Your cousin's not supposed to kiss as well as your girlfriend. Okay? You aren't supposed to be kissing your cousin anyway. Oh gosh. All right. But anyway, Mark, Carl, thanks for being here. I'll get my model. Hey, Jackson, what are you doing? You want to come see us? Jackson just busted in the studio. You want to come see us? Come here, Jackson. Come here. No, I was trying to get Jackson to make an appearance. Come here, Jackson. Jackson. Come here. Oh, yes, sir. Oh, yes, sir. Oh, yes, sir. All right. All right, back to work. Hey, good afternoon, SB. All right, Mark, let's see what Mark's. I'll let you guys talk for a while. Mark says, all I own right now is GDXY, 5,000 shares, BITX, 200 shares, and I sold 61 covered calls on BITX, so the rest is in cash. So essentially, if you sold 61 covered calls on BITX, you're essentially out, or not really out, but you're neutral. You're, because you're long and short, whatever, you're hedged. So essentially at this point, you don't want Bitcoin to keep going up. You want Bitcoin to go down. I mean, but on the other hand, you don't want Bitcoin to go down super fast, because then you have too much FOMO for not buying puts or selling. You know what I'm saying? Not being more aggressive, but anyway, I think that's a good call. I wanted to look at this. I've been using BITO for the proxy for Bitcoin because it has liquid options, and all the charts look the same. I mean, I could pull up. They all have this giant gap down here, and but yeah, I could see a little reversion to the mean. I was thinking about doing one of those myself. So you have two means right here, two close point of controls, 22.5 and 2190, 2180. So what I was thinking, what I thought kind of made sense, let me show you 21A. Let me try to do this. It may not. I was looking at something like this earlier, and I didn't get it. Obviously, I didn't get it on before the end of the day, but I might look at something like this for tomorrow. But just a little reversion to the mean trade where you aren't asking it to do anything except just pop back down to 21. So watch this. And so that gives you till the end of the week, which is just 3 days. It's only $38. And I love these kinds of trades, or I don't know if I love them. All right. So what I'm looking at is, looking at this got up here to 2084. Like if I would have done it up here, I probably would have shot for this one, 1950, and I wouldn't have got all the way there. It would have hit the other one, but it would have got close enough. And I think if this one just gets there, it'll be close enough, or I'll show you. But yeah, I want to aim for the 2181 is really basically 22. So really, I just set this right on. I could also use 21 and a half. We'll set this right on top of 22. There's just not a lot of juice in these options. And you think because it's Bitcoin, I mean, it says right there it's a 51 IV, but I mean, that's actually a decent trade right there. I mean, it's a nothing throwaway trade, but it actually, if you're just trying to play for that little pop back to mean, and you can do all right there. Let me see if I can make it. I don't know. I'm just not liking I'd have to see when the market's open. It's just between strikes, and I'm not really seeing anything there. But yeah, I could see hang on. Let me just put it somewhere so we have something to look at. There was one of them that was decent. It aims for 22. It costs $29, but you can these kind of little nothing trades like that sometimes can be, I mean, once I started learning that you don't have to, in options, I think you guys probably know this, you can you're either doing something where you expect it to go outside the market maker move, you're trying to go beyond, and that'd be like a long volatility type play. Or when you're selling options, you're doing something that you wanted to, you're playing for it to stay within a certain bound. But you can just do those little trades where it didn't go anywhere. It goes down 0.5% and it makes a triple, but it just reverts to a key area on the chart. Once I learned how to do those, it gave me another tool in the arsenal. Do you guys ever do trades like that? Mark's way more sophisticated than I am. I mean, so there's no telling. SB's the one in here that's really, SB is a master at synthetics and covered call strategies, and synthetic and poor man's covered call strategies. Anyway, I'm glad you're here, SB. But Mark is too. And I don't know where Scramble everything is, but Scramble's a darn good trader too. I'll look at this ELF. I hope we didn't already miss it, Sean. You said, okay, ELF's after the close tomorrow. So I'll do that one in the morning. I just wanted to do Dick's today because there's probably somebody that was watching and may have done that. And it's liquid. It's a good one to do. We got it in right before the close. We'll do that one later. Okay, but I'm really excited. I'm excited about this. I'm excited about my yield, the yield report or whatever. All right, Mark, what are you saying? Mark's saying the idea is to use the margin account for low margin requirement positions, use the cash account for everything they have high margin requirements on. Yeah, I got it. Okay, and I'm weaving all over the place, but I want to weave back. Back to the Tesla and NVDY and buying protection directly. I just think those options are not liquid enough and are priced super high. If you sell even though you can sell a call, it's hard. You can maybe get exercise. You just have to be careful. But where I do think, and I'm trying to prove this, but I do think I do think this is what a person could do. The same strategy. Somebody has $100,000 worth of QDTE or triple QI, or it could be anything. ULTY, $100,000 worth of ULTY. Okay, you're getting 5,000 every month, so you're getting about 1,000 a week. A person could take the 1,000 a week, or could figure out what you're getting, and you could take half of it. In fact, as soon as it goes into your account, you could get it on the schedule where the day that it's payable in your account, you just on that day buy an at the money put option for the next time you get paid. And of course you do it however many you need to do, depending on how big your account is, how much you want to hedge it. But I think using Q puts or SPY puts to just hedge the overall market. Because if you're on ULTY, or you're on maybe GPTE, or you're on LFGY, or any of these, YMAX would be a good one. YMAX or YMAG are great funds, but the one thing that really hurts you is the market CRASH. I don't even want to say the word. I'm knocking on wood. But so if you took half of the money and bought a put every week that lasted until the next time you got paid, these ones that pay weekly would actually be perfect to do it. If you didn't have the money to bankroll it yourself, just schedule it to go from time to time. And I think this is basically the same thing as we were talking about getting Tesla and buying puts on Tesla. I think the puts on Tesla are too expensive. I think you could realistically do this with puts on SPY or Qs, because they're index puts and they're super liquid. But this would take a little bit of doing also, because the thing is, what would happen inevitably is the market would go down and you would have a profit in those. And then, hey, do I take those off? What do I do? If you don't take those off, you just leave it till expiration. You don't take those off. Half the time the market's gone back up and you lost the money you did make. So there's some management, but that could be fun also. Because what I would do is, as soon as if I could ever get those to double. So if I bought options at 1, and if they ever got to 2, I would take them off, and then you have free options. And then, there's still a hedge, but whenever you have the chance to monetize the hedge, to make it where the rest of the week is free. And that's the way you do it in real life. And anyway, I mean, that's the way it's called scalping gamma. So when a hedge fund does it, it's gamma scalping, but that's the idea. But that's what would be more interesting to me. I just don't have $100,000 worth of ULTY or whatever. But if I had $100,000 in QDT, or if I was managing money for somebody did, or had more, or had $1 million in it, that would be one thing I would look at, is just because you can make just think, what did QDT on $100,000, you're going to make $30,000, $35,000. Okay. So you could easily spend 15,000 of those dollars, and that sucks. I mean, but still you cut out all your downside. If the market goes down, you would actually probably do better. I mean, you would do better. You could cut out all your downside. You'd all kind of be hoping for a bearish market. What would happen most times is you're just throwing that money away, though. That's the problem. That's why there's no such thing as free money. Most of the times you can just count that money gone, but that's fine too. Count the money gone. You have, instead of 30%, you have 15%, but it's a real 15%. It's a 15% that where you weren't worried about a market crash because the crash was hedged. So it's a hedged 15%, if that makes sense. All right, Mark, what are you saying? Managing the account keeps you from getting bored? Well, good. I'm glad to hear about it. What are you doing tomorrow? You're going to buy a couple hundred SPY and buy back into Palti and Misty and Coney. Heck yeah. But a big trader like you could do the same thing. Let's say you have $100,000 worth of all these high yield funds, and you totaled everything up, and you're going to make 5,000 this week, and you're going to make about 5,000 every week, or 4,000 this week. You could say, okay, out of that 4,000 I'm going to spend 2,000 of that on puts. Now, try not to blow it in a smart way. I'll buy them, and if I get a chance to take them off for breaking, and then roll them, I'll do that. But and you don't hope for a bear market, but by God, if you hit one and you're buying $2,000 worth of puts every week, and you're doing it with house money too. Remember, they're giving you money. You're just recycling the money that because people say these things pay too much. Okay, well, I've always said, yeah, they pay too much. Okay, well, my first solution a long time ago was, well, don't take it all. Just reinvest half of it, or reinvest 2/3 of it, and that would eliminate most of the bad stuff that happens. But the other thing you could do, if they pay you too much, okay, we'll take half of it or take 1/3 of it, and buy puts in an index. But what I was just saying, as a trader like you that just has a little bit of everything, you can add it up. And then you could buy, you could figure out what it comes to, and you could buy 3 SPY puts every week, or whatever, 5 SPY puts or 5 SPX puts every week. But it would be whatever size for your account, and then it would hedge virtually all the downside out. Like I say, you'd almost be rooting for downside anyway. But I think that would be a better way to hedge it at the index level, and hedge it on a portfolio level and at the index level than at the single stock level. That's all I was trying to say. All right. Is there any earnings out? Let's see if anything's out. We had these right here. OKTA, Box. I can't believe we didn't do any of those. This one probably would have been good. Well, we have good ones in the morning. We have dicks. All right. So I guess I need to get busy now that this thing takes like 2 hours to do every night. This is putting these trades in here. All I do is A through F, YieldMax gives me. All I do is I add G, H, I, J, K. I build the spreadsheet out. But there's a lot more to it than that. I mean, if it was only that easy. But I'm really proud of this sheet, the yield tracker, and so we can track it on a corporate level. Then once I have multiple days, we can say, we can look at every day and on a corporate level, but then also we're also going to be able to look at every day on an individual level. We'll have Misty's line will be there. Then tomorrow, Misty's line. So I'll have a separate Misty page where all the Misty days will be. Does anyone know how to do that? Is anyone good with database functions, Oracle or anything? You don't even have to be that good, but there's a way to categorize this into where I only have to do the work once. I just want to do the work here. This is everything. But then from here, this page builds the individual pages. And I also want to build one that's just based on the total of everything. But I'm really excited about the yield tracker. The yield tracker is going to show us in real time what's happening. We still have to watch Retire on Dividends because he guesses where the dividend's going to be, because Jay pays not only from the yield, Jay will also pay out of NAV sometimes. I mean, especially these ones that are going up a bunch. Retire on Dividends has done a good job looking at that. But we'll at least know how much money Jay has to pay us. So that's what I'm excited about. Well, you could see these other ones that are doing well. Look at AMZ, made $851,000. It's $250 million fund. That's 33 bips. That's really cool. Look at Fibby. It's only $160 million fund, but they sold $500,000 worth of premium the other day. Look at Infly. Infly's criminal. It's only $150 million. But here they are, just selling premium every day. So yeah, if anyone has any ideas on how to take this sheet and break it out, I'll Google it. But anyway. You're not a database guy. Yeah. I've used spreadsheets forever to track options. The reason I learned spreadsheets was because I built this little option thing back when I was in college, and it would just show you the break even or something. It's super basic, but I was real proud of myself. But I learned how to do, but then I would also do paper trading. I would use Excel, or I think it was Excel even back then. It was on an old Mac. But I had one of those Mac, the 9-inch, whatever those were called, Mac Plus. They were really good actually for the day. But anyway, yeah, no, that's the only reason I learned how to do it is for options and stuff. And then I totally forgot how to do it until a few years ago. Then I got back into it. Yeah, just to track the transactions and stuff. But so here's the thing I'm learning though. Now with AI and stuff, it's powerful. It can do some crazy, interesting stuff. I can't believe I just figured out how to do this. I should have done this a year ago. But this is actually what I figured out how to do is actually easy. I mean, it is and it isn't, but there's actually nothing to it to try to know every day each fund how much premium they sold. So anyway, I think I'm hoping that, plus I'm hoping to give you guys and myself the information we need, because that's part of the problem is which ones are doing the best in that, which ones are doing the best selling options. I mean, that's part of the problem. But then the other part of the problem comes down to technical analysis, which ones are up the most. Sometimes you'll have a bad one that's up the most, or just because you also have to factor in just market trends. And I didn't have any way to look at that before the max factor. So we'll run today's latest max factor. And this is just momentum. This doesn't factor in. This is just price. So it's Netflix, Maxi, Carvana, TSLP, Snowy, Coney, NVW, TSLY, Tesla, IDevo, SPUT. Okay, but I don't even know why we look at that, because this factors in when you factor in risk. This factors in risk and yield, but it's Coney, Tesla, NFLP, Snowy, TSLP, Clip, GUI, NVW, Maxi, Carvana. That's a pretty good looking group there. Make a chart. There's a chart. That's today's max factor. That figures everything, risk, reward, everything. So, and that's why Maxi wasn't as high. The high is just on momentum, but it has a little bit less yield compared to some of these other ones. So look at old Triple QI. Triple QI may not be quite as good in some areas as some of these other ones, but it makes up for it in yield. It has a gigantic yield. So it's like Maxi does not have a gigantic yield, but does well on price action. So it makes up for it with price action. Triple QI does not do well on price action, but has a gigantic yield. When you figure both of them in there, they're both somewhat similarly valuable to you, 8th and 10th, according to this metric. Look at this NBW, this single stock high yield. This one has what, 20% leverage. Now this one isn't a year old, so I don't have the beta on it yet. And so I had to make an allowance. I had to guess at the beta. And maybe I didn't do it high enough. I don't know, but I guess the beta of 1.5. That may be too high as well, but I had to make some allowances to have that one on there. But I know you guys want to see that one on there, and I think that gets us in the ballpark. Then we have GUI. GUI's one people never talk about. Why is it on here? Let's go look at GUI. How did GUI get on here? I'm going to look over. There's GUI. So let's GUI, A factor and B factors, momentum. So 1.9 and 2.6. So it's just Google's been having that one may not be a traditional powerhouse, but if you look at the 20 period and 50 period moving average, it's on top of both of those. And that's one of the things the metrics keys off of. Like I say, it also looks over here at the beta. Look, this one has really a low beta, 19. We look at the average true range as well as the volatility, as well as the assets under management, as well as the trailing 12-month dividend. It just factors all of this in. This is really everything you need to know. I wish I would have discovered this sooner. I wish we would have been tracking this back in December. I would have got out of AMD and Coney and all those other ones into something. That's the reason I invented this. I invented this so that will never happen again. Because even at the time, even if I would have got out of that, I didn't know what to get into because I wasn't tracking something like this. But at any given time, there's money coming out of some of these and going into others of these. There's like 50 in the universe. You know, I mean, the China stuff used to be terrible, and now it's back to the top of the pack. So this markets have trends. Sometimes trends persist for several months, sometimes longer than that. And to the extent they do, you can capitalize on them. All right. So I think that's all I had to talk about. If there's something else you guys want to talk about, put it in the comments. You were down 20,000 at Fidelity on Palti. Well, but except for the distributions, you were actually up. Yeah, it all goes in there. So I sold the payoff margin with about a $25,000 surplus. Yeah. So once you do that, once you figure everything out, then whatever you're left with is called the true yield. I'd forgotten about that. I made a video a long time ago, and I was just saying that you could go to the end of every month and just replace whatever you needed to make your NAV go back to where it started from with the dividend, with the portion of the dividend. And if you didn't have enough dividend, I guess that was just tough. You just invested all of it. But anyway, but you could do that, and then you could look at what's left over, and that would give you a true yield. I did a terrible job describing it, but look at it. Let me show it really simplistic this way. Like we'll look at the true yield on Defiance. So we'll look at triple QI, and we'll compare it to Round Hill. Everybody loves Round Hill, and we'll just go. Well, let's see. When did it? Okay, March 7th. Let's just go a year. Okay. All right. What you could do, you could look at you could just do it at the end of the year. It'd be So you could go out a year. Okay, I've had this a year. I bought it at 49. It's at 28 now. Well, I have 22 in dividends. So you put the dividends back in until you get back to your 49.56. Okay, whatever you're left over with is the total return. And sure, it comes to about 2.6% on this. If you do the same thing on triple QDT, they had better total return. You started at 46, but you ended at 36, but you had 14. So you take 10 out of that 14, put it back in your NAV, and then you're back to even, and that leaves you 487 left over, which is more like 10% because it was a $46 stock. See, and that's the total return. That leaves you whatever's left is what's left over. And the reason that the covered call funds almost always underperform just the parent asset is because there's no such thing as free money. If you could do a covered call strategy, take an income and have more NAV upside and still do better on NAV than the parent, I mean, that's all anyone would do. You wouldn't even buy stock and people would just sell covered calls, of course, but it's not the way it is. And there is no such thing as free money. So even though these things can generate money, they almost always generate a little bit less than you would have had otherwise. So anyway, but true yield, really, I just called it true yield. I was making up something, but you just look at total return, and that is the true yield. But if you like to think more mechanically, you can actually look at the prices and pay yourself back. The QDT is a good example. You can see that you had it for a year. You could pay yourself back, have your NAV replenished. Whatever's left over comes to about 10%. It's not free money because guess what? I wonder how much the market was up over the same time period. Let's just check. It's pretty close to free money though. The market was up just fractionally more, though. Now, Round Hill is something else because Round Hill is getting awfully close to free money in bullish markets. Now, during the pullback, they pulled back more than the other ones, and they did what we would kind of expect. But they're getting close to free money, or they're getting close to discounted money. All right, guys. So I appreciate y'all for being here. I'm going to let you go. I'm going to go work on my spreadsheet. The YieldMax probably puts their trades out pretty soon. Like I say, it takes like 2 hours to do it, so I better get started. Oh my gosh, I don't know what I got myself into, but I'm trying to find a way to streamline it or make it easier with AI. So we'll see. Guys, I really appreciate y'all for being here. I hope you have a great day, and I will talk to you later. I'll be in Discord. There's something we forgot to talk about. I'll be in Discord. All right, guys. See you, Mark. See you, everybody. Thanks for being here.